I really appreciate everybody being here. We're here for our very highly anticipated webinar on unlocking IUL, essential insights and prospecting wins. We're thrilled to have you here and as we delve into the fascinating world of IUL, Indexed Universal Life, and we're going to provide you with an invaluable knowledge to take your business to new heights. Today, we've partnered with Annexus, the foremost independent developer of retirement insurance products, to bring you these exclusive insights. Prepare to gain a deep understanding of IUL as we explore its core pillars, from living benefits that provide financial security during life's uncertainties to the strategies for effective accumulation and growth. We'll also delve into the intricacies of index crediting and par rates, enabling you to maximize the potential of IUL for your clients. But we don't stop at theory, of course. So in this webinar, we'll go beyond knowledge by presenting real-life case studies and prospecting profiles that focus on business owners, women, and high net worth leads. These winning strategies will help you to approach these specific demographics with confidence and expertise on unlocking new business opportunities. So we have today with us one of our favorites, Mr. Stephen Poppy from Annexus, and also one of our favorite sales life VPs at DMI, Mr. Josh Rem, and then Maureen Walker here to help us along. So Maureen will help us with the Q&A. So if you have any questions as we go, just use the chat function or the Q&A function, whatever you're comfortable with. And we'll probably get back to your questions at the end of the webinar. But Josh, I appreciate you being here. I wanted to get your thoughts on anything you wanted to discuss. We'll let you say hello.
Yeah. Well, hello, everybody. Thanks for having me and thanks for coming. Like my other colleagues at DMI, we were in client-facing roles for many years. And as an investment advisor representative myself, helping clients plan for retirement, I knew I couldn't guarantee the future values of our clients' accounts. So what we were really doing is trying to position them to have the highest probability of success. We even used financial planning software that had this cool little dial we could show to clients that showed them where they were at and the probability of success based on our inputs and the products that we used. And they trusted our recommendations, but of course, the client will always walk away hoping and wondering to some degree how much our projections are going to line up with the actual results. So the long and short of it is the solutions that Annexus provides will move the needle in our clients' minds when it comes to the probability of their success. And I won't steal Steve's thunder, but they really do that by some really great partnerships that have led to product innovation that has produced indexes that perform extremely well during any part of the market cycle. They give an internal rate of return, especially from a tax-free standpoint, and a risk-adjusted rate of return standpoint that would rival even some of the best active money managers. But on top of that, these participation rates, these multipliers of what the index actually returns, makes it so that we really don't have to achieve that much in order to achieve what we've illustrated and what we've projected. So all in all, they're helping us give our clients more confidence that they have a very realistic probability of success towards what we've projected and what we've illustrated. But it's a great, easy story to tell, to help clients to move on our recommendations. Steve tells that story the best, highly experienced. He said the 5th of July was his 37th anniversary of his time in the business, but who's counting? But at any rate, a lot of good information to look forward to. And with that, I will kick it over to Steve Poppy with Annexus.
Well, thank you, Josh, and thank you, Glenn. Thank you, Maureen. It's great to be here. Thanks for the nice introduction. Yes, I am old, Josh. I am old, but I am committed to another 37 years because I work with great folks like you. I am super happy to be here. I want to say, first of all, thank you for your time today. I'm very excited to share the story about Annexus and help you. Really, my goal here today, I guess, is to help you maybe find one client, find one person you know, find one idea here today that can help move the needle for your client, help you succeed. So We're going to, of course, this is, Maureen reminded me last month, this is Life Insurance Awareness Month coming up. So we thought this would be a timely webinar to kind of get your juices flowing for Life Insurance Awareness Month. So we're going to go from there. And then when we wrap up here, we're going to do a little Q&A and we'll take it from there. So who is Annexus? Let's just start off maybe with some basics and talk about who Annexus is. Josh did a really great job, but we are in Scottsdale, Arizona. That's true. We've been around since 2006. Yes, it's 100 and whatever it's going to be today, 112 today. And I think they said 116 coming up. So it's been kind of a fun time to be here. So a nexus means joining or bringing together. That's what a nexus means. And our vision has come true. We are the leading independent developer of retirement insurance products in the industry. And when I talk about bringing together and joining together, what we do first and foremost, we're the product developer. We design product. We are, the carriers are not the only people in the 21st century or the only organizations that can develop products to help your client, financial service type products. So we are the developer, the architects of these products. We do that. Our strength is in our development of product, number one. And number two, we do it through strategic partners. And one of them, of course, is DMI. We're very, very limited access product. We're very, very careful who we give our product to. We have a set of standards. So we've been working with DMI since the very beginning. Really great, awesome distribution partner. Really, really proud to be working with DMI. All their staff, all their folks are really very, very knowledgeable to help you grow your business in many different assets. So we are, and we, as much as we think about ourselves as being this fantastic product developer, and we're super proud of what we build, and we got our hands to our heart that it is a great product. Our strength really is, and you and I know that products come and go, but it's all about partnerships in this business. So we're really proud to be working with DMI. So, and then also we work with kind of who's who on Wall Street. Obviously, I mean, not obviously, but Wall Street knows who a Nexus is. So part of our build, and we also work with a prestigious actuarial firm named Genesis Financial. So that's how we do it, through these strategic partners, of course, and the distribution is part of that. So thank you for your help, you guys. So let's just take a little start here. I thought we would just start with some, make sure we're on the same page here. And then we're going to first just talk about IUL. We'll talk a little bit about a Nexus. We did that. We'll talk a little bit about the IUL, some of the basics, some of the pillars, some of the different benefits you get from IUL. And then we're going to wrap up, as Josh said, is we're going to look at some opportunities for you to really prospect, or who to look for, who's buying this product, who do you guys see that can take advantage of this product. So that's kind of where we're heading today. So of course, there's different types of life insurance. I'm sure you know this is pretty basic information, but we are talking about IUL today. It is considered permanent life insurance. That's true. Our product is specifically designed, though, more as a cash accumulation and a tax-free income tool. Yes, it has a death benefit. That's true. The death benefit is super important in a lot of different financial planning situations. But the main purpose of the product is we're using the death benefit. We're using the life insurance design or benefits of life insurance to create a product to help you grow cash and then help you get tax-free income for your clients. So permanent life insurance, of course, is more expensive. It lasts a lifetime. It pays benefits. The different types are whole life, universal life. In any kind of universal life we're talking about, whether it's current assumption universal life, variable universal life, index universal life, it's all the same. Just the funding method or the mechanism of growing the cash is different, okay? Now, so what can it do? Obviously, it's permanent insurance. It provides a tax-free death benefit. That's cool. That's a great benefit. It provides the opportunity to grow the money, tax deferred, of course, and you have access to the cash, while you're living. So it's the living benefits on this product that we really want to kind of focus on. We just don't want to focus on the death benefit necessarily. This is about the living benefits, this product, this design. So these are the pillars of IUL, right? So death benefit, of course, we've got tax advantages, right? Tax deferred growth. We got tax-free transfers. We got tax-free income. We got the upside of accumulation growth on the upside. We have a floor that protects on the downside protection. And of course, that comes into play more often than you guys think is just the living benefits. They're included automatically in the contract. Chronic rider, chronic illness rider, critical illness rider, and terminal illness rider are all included in the product. So you get those benefits as well. So why IUL? Why use IUL? What makes IUL so unique? Well, IUL has really cool different properties in the financial services world. It's very, very unique, right? There's no contribution limit. I'll pick a few, right? You can discriminate with it. There's no reportable income. You can get the money before you're 59 and a half, right? You have premium flexibility. It's creditor protected. And if you think about IUL kind of more on the technical nature, how does it work? I get asked this quite a bit, so the overview, pretty simple. You got the premium payments, you got minus your premium expense charge. I won't get too far into the weeds here. Then you got your net premium. And then you got to decide, hey, am I going to go to the index accounts or the fixed account? You got both those options in IUL. The index account is most common, why people are using this product. Then, of course, you got the interest credited. And then from your policy value, you have your monthly deductions, your insurance charges, things of that nature. And then you got your distributions. That distribution could be a death. That's true. Yes, it could. That's a tax-free, federal income tax-free death benefit. That's a great tool, great benefit. You got tax-free income. That's the majority of why people are buying our product. They're buying our product or using our product for the cash deferred growth, and they're buying it for the living benefits around tax-free income. All right, let's just do a little housekeeping here. Let's do a little terminology. Hopefully you know all this. I'm assuming most of you do, but let's talk about, first of all, in IULs, what you find cap rates. That's the maximum rate used to determine how much interest the policy is going to be credited. I will note here that at Nexus, our products are uncapped. Our products are contractually guaranteed to be uncapped. That's a big nugget right there. I hope you heard that. It does have a minimum floor, like Josh talked about so well. There's a minimum interest rate guaranteed by the insurance company. The floor is 0% for our product. Our product does have a 2% guarantee. If you end up surrendering the policy or dying, then we'll do a look back. We'll guarantee you'll get at least 2%, not every year. But if you surrender the policy, you die, something of that nature, if you didn't earn at least 2%, you will get that on your indexes. There is a par rate. That seems to be really confusing, but just think of it as math. It's just a way of increasing the amount of interest a client gets on their policy. It's just a multiplier, if you will. And then you have a spread. The spread is what the insurance company subtracts before you get any growth rate. Okay, good on those, pretty easy to understand. These are the different terminology associated with these different index strategies. Different accounts, you have your account options, of course, you got your fixed and you got your index accounts available. The fixed index account is credited with a rate of interest declared by the insurance company. The index accounts are credited with a rate of interest based on the change in one or more of the indexes. Okay, the index strategies vary by different insurance companies and are based on one or more market indices. We do build at Nexus. Our indexes are proprietary. We do build them in-house, right? And you may say to me, when I said the word insurance carrier, you may pause there and say, well, what do you mean, Steve? Well, we team up. Once we design them, then we look for partners, strategic. One of them is Securian. Those are the insurance companies that once we have designed our product, then they build it to our specifications. So the index strategies vary by carriers, vary by us. We built them and are based on one or more different market indices. We'll get into that another time. They may include a number of indices that may seek additional, like volatility control is real common. We're big on low volatility. We apply different methodologies to evaluate. Sometimes you'll hear the S&P 500. That's kind of the gold standard. And then you get a lot of flexibility and control. You can switch between indexes. You can make transfers. All those kind of things are available in the product. So how's the interest credited? Well, this is a really good math problem. It's pretty simple though. The policy is credited with the index interest based on the interest credit. So you have your end value minus your initial value, and then you divide it by your initial value. Then you would multiply that by your par rate. You would minus any kind of spread you may have, if applicable. Right? And then what you get from that is you get your, whatever your interest is earned, you have your floor, of course. The floor is 0. You may have a cap in a product. So somewhere in between there. Now our product is uncapped, so you don't have to worry about it. So the earning potential is unlimited in our product. And then really simple concept here. It's just about the segment. We use the point-to-point approach. There's no magic to it. There's an available 1, 2, or 3 year segments. You look at your index, start of the segment period. And then you just look, and at the end of it, 1 year, 2 years, or 3 years, you see what the index did, and that would be your return plus your par rate. So let's just kind of dig into this a little bit deeper. I'll slow down here a little bit. The par rate seems to be kind of confusing. The rates may be increased or decreased by the insurance carrier at the beginning of each segment. The insurance company establishes a guaranteed minimum par rate that guarantees that the participation rate will never be below the published rate. What we're really known for here at Nexus, we have really high contractual guarantees on the par rates. Okay, so let's pretend here that we have a 6% return, okay? And let's pretend that you're gonna get a 70% par rate. So that means if you take 6% multiplied by 70% of that, you get 4.2% return on your cash in your policy. Okay, if I have a par rate of 120, for example, if I multiply 6% by 120, my client then would get 7.2% return. So these par rates are a way of making it easier for your client to have more gain in their policy. They're very, very, very powerful tool. So let's pretend here that we have a first year, let's just say we have a 0% return. Right? And let's just say we have a 6% return. So for example, if the market goes down 12%, my client would get what? 0%, right? There's a minimum of 0% floor, right? And if I get a 6% return and I have a 100% par rate, obviously my client would get 6% return. If I had, for example, in my example here, I had a return of 15%, but I had a cap on my product of 9%, my client would get 9%. So a cap is a limitation or a cost. You can think of it as a cost. Now, let's pretend we have a return of 15%, but I get a par rate of 120. What does that mean? Well, I get the uncapped nature of the product. So just a little bit of overview there. It's pretty simple. Hopefully that's understand cap versus uncapped. So how do you use this product? The Universal Life can be an important addition to any financial plan, of course, due to its ability to provide a federal tax-free death benefit, of course, to accumulate cash and offer a tax-free income through loans and withdrawals. So you can use it for a lot of different scenarios: estate planning, life insurance, another asset class. We get a lot of play on that. Another place to save money tax-free. Of course, we get a lot of play on it for tax-free income. You can use it for college planning, of course. Of course, it does have a death benefit. So a lot of people are very interested in the legacy type planning, tax advantage savings, just to name a few. So a Nexus. What are we known for? Well, Josh alluded to it, and I won't go too deep in today, but I call this the trifecta. I call this the triple. If you like baseball, the All-Star game was on last night. I love baseball. This is a triple, right? So the number one thing, or our philosophy at Nexus, and what we have learned, is the number one reason an IUL is going to work or not work is going to come down to cost. Cost is the very most important thing in any IUL design. And at Nexus, when you get our illustrations, we always provide you, when you get them from Josh, when you get them from your team at DMI, we're always going to provide you with an annual cost summary, because we feel like it's the most important place to evaluate any kind of product that you're selling. Cost. Now, we're not really big on, as a marketing company, over illustrating our product. We think of the illustration as a sales tool, a client-facing tool. We will talk more about this at another time. There is a different way of evaluating product besides just looking at the illustration, and I would highly recommend any kind of evaluation you do around IUL, please start with the cost, number one. Number two, we have very, very high par rates on our nationwide product. Our par rates are 180 to 275. Our indexes, of course, are uncapped. I mentioned our indexes are also proprietary. And then lastly, you want to have really strong contractual guarantees around the par rates, because guess what, you guys, these products change all the time. Our par rates are guaranteed never to be below 100% to 125%. So that's the feature, that's the design, that's what we're known for, that's what the innovation is all about. Right there, low cost. This is why to use it. This is why the product is sustainable. This is why the probability of success is so high that Josh mentioned. It's going to be all around this design right here. And of course, we talked about, based on these different indexes, are based on different academic due diligence. We work with some of the most famous thought leaders in the world. Roger Ibbotson is one of them, Schiller. And then, of course, we partnership with DMI, of course, our distribution partner, and Nationwide and Secure are also the carriers that we work with and making our product. All right, life insurance personas. Let's get into helping you guys. Let's transition into some prospecting ideas. Who's buying our product and why? Now, these personas are available on my Nexus. I'll throw that out as a little teaser for you, Maureen. Maureen and your team, Josh, can give you access to my Nexus. When you get done with here, if you take one thing away from it, please ask them for my Nexus. It's where once you get, if you're not contracted with DMI, get contracted with DMI because they are a fantastic place to do business with. But Personas on my Nexus, we do all our marketing material here in-house. You'll find it tells a very cohesive story. It's not like a one-off deal. A lot of carriers build a product and they build the marketing pieces later. It's funky. It doesn't work. We don't do that here. A big team of people working on these. So these are different personas. So I want you to think of two things when you're looking at this. If you already have a book, if you're already successful, if you're trying to get successful, congratulations. If not, if you're new to the business or coming on or thinking about it, I want you to think of these as prospecting tools as well. I was really big into prospecting. I use things like this similar all the time. So let's talk about, first of all, who's buying our product and what are the problems they have? Well, number one reason that people are buying IUL is key employee retention, right? Unemployment's at an all-time low. If you're a business owner, what are you worried about? You're worried about losing Maureen. You're worried about losing Josh. You're worried about using Glenn. You're worried about losing Bon Jovi if you have a band. You're worried about these key people and you're thinking about them, right? They're critical to keeping these businesses open. So they can help. A key employee may be a top contributor, second in command. You guys get it. You guys know who these folks are. These products can help the business retain employees and keep the recruiters away from them. So what's on their mind? Well, they are worried about their business and they're worried about retaining their talent and they're worried about keeping their business relevant. They want the current success and future success. Guess what? They may want to sell the business or give it to a child down the road. They want it to be healthy. So an IUL can reward key employees with permanent life insurance that offers, of course, cash value growth potential, right? Can be access for anything they choose. Can be a source of supplemental income. It can be the option riders. Life happens to all of us along the way. They may have a chronic illness. They may not buy it for this reason. They may buy it for the tax-free growth. They may buy it for the savings. They may buy it for the income. But remember, we're getting some risk transfer in this product as well. So it may be a critical illness. It may be a qualified long-term care, illness. Everybody talks about long-term care today is so critical in planning. It can help with that. It can help protect the employee's family if they pass away prematurely. They may be concerned about a financial loss on the business if the key employee leaves. So IUL can just be a powerful tool to keep the employee in place, give you that retention. And also it gives them a lot of control, right? They are interested in retaining and rewarding employees, but they still want to remain in control of the policy, of the ownership of the policy. So while the owner maintains the business ownership, the IUL is offering these key features to the employee. So and by the way, you probably know this hopefully, but the business owner can select who to offer this to and not. They can't do that with a lot of other plans that are available to business owners. So they can be more selective. They can pick their key employee. They don't have to pick all their employees. So IUL is more than an income tax-free death benefit. We've established that. It's key, can be a very key part of an overall benefits package for the right employee for a lot of great reasons. So to summarize, key employees are highly mobile, of course, right? We want to keep these folks in place if we can. Each departure is a significant cost. You talk to employers all the time. It costs a lot of money to get an employee up and running. And then it also employs these, I can speak today, it also has these additional benefits to key employees without giving away the equity. Really, really cool tool there. Small business owners, right? Small business owners have a lot of irons going, a lot of eggs in the basket approach to future planning. They may want to minimize their single investment risk. They may just have all their money in their business. You find that to be quite common. You can help introduce a more diversified strategy. You can help them meet different kind of income planning needs. Now, let me stop here for a minute, you guys. What I have found and what I've learned is many of the people you work with are really good at saving money in 401ks and kind of your lump sum asset products. But a lot of people, and I find a lot of advisors, haven't really thought through how they're going to create income for their clients down the road. Everybody needs some base form of income in the future. Why is Social Security the most popular benefit program in America? Because it gives everybody, right, the check every month they can count on. So an IUL can help the small business owner think about that, can help them save money for the future, It can help them have a stream of income when they're ready to retire, right? It provides those different kind of same strategy. Here's the key employee: tax deferred growth, tax-free income. And they also, what do they worry about? They worry about debt. They worry about how to fund business improvements. And the impact on their bottom line if they ever need to buy out the key employee. The life insurance, the IUL, is a really nice place to store additional cash for opportunities that may pop up. They may need to grow their business. We'll find that to be really common, these products. They'll build cash in these, and then they'll pull the money out to maybe fund another franchise or to hire another employee. Maybe use the money to buy somebody out, right? So it becomes a really good tool, maybe to recruit new talent. They need the money to recruit people. And of course, they want to keep control of the product. They want to maintain control. They're concerned about potential income needs, of course. In the event of a catastrophic illness or death, they fear burdening their family, impacting their business. Of course, the death benefit can help. The cash can help. So again, what is it? IUL is a tax advantage way to give a small business owner the flexibility they may need to protect their business, protect their family, and supplement their retirement income. Hopefully you've thought about one or two people as I've been talking here, and maybe you've thought about, who's a key employee. One tool I used all the time is when I was in front of my clients, I would say to them, hey, Josh, I know you don't know anybody that wants to save any money or buy any insurance, but I do know people who are successful. Who do you know is the most successful small business owner you know? Now that makes it easier for the person to think about somebody. If I said to you, who do you know, Josh? You may say, well, Steve, let me think about that. I'll shoot you a list. Don't hold your breath, right? But if I said to you, hey, who do you know is the most successful business owner you know? Who do you know is the best dentist you know? Who do you know that's happily married? People come to mind. So these become a really great way, a tool of feeding a name to your clients and helping you prospect. So, right, what is this going to do for the small business owner? It's going to give them ability to expand. It gives them tax-free income, gives them a pension, and it gives them money for business succession planning. All right, let's transition now into our favorite, the high income earner. We're talking about Josh now. We're talking about Glenn. We're talking about Maureen here, right? What are they trying to do? What are their interests, right? The high income earners need to what? They need to protect their family too, right? They need to protect their businesses. They are really looking for unique ways to keep funding their retirement, funding their futures. Many of these folks have their Roth, other places saved. They are savers. They can be savers. They have other assets. This becomes a really great alternative investment. Another place to save money. Life insurance is an asset class. It helps them reduce their taxes today, and it helps them prepare for a tax-efficient future. What's on that person's mind, right? Well, they are already maxed their 401k, Josh. They're looking for additional vehicles for tax-deferred growth. Remember, we talked about why IUL? Why consider IUL? Why is IUL so unique? Remember the benefits: tax-deferred growth, tax-free income, no contribution limits, no penalty for 59.5. That all is in this category right here. So it offers a way to grow that money, a potential growth on that money during the accumulation period, tax deferred, and IUL also has no limitations on the annual contributions, right? And many of the investments they have, right, they have a liquidity problem. These are good investments, but during an emergency, they may not have access to the cash. Right, the distribution from IRAs, 401ks, things of that nature can be difficult. They can be taxable. They may include penalties. Right? So this policy in IUL is a way of providing liquidity. Liquidity is really key. Personal needs, such maybe college planning, right? Maybe they want money for their grandchildren. They want to travel, unexpected medical expenses, flexibility and access to the cash. Big solution, right? And then lastly, they want to protect their families. I don't care how successful somebody is, they always typically need some liquidity at death, right? We're not using this particular product for the death benefit, but the death benefit is a nice part of this product. It makes it self-completing. You might have, it can help offset income. When you look at planning, maybe their Social Security goes down at death. Maybe the one person worked, the other person didn't work, or the one person made more than the other person. And maybe the Social Security goes down. It's a way to augment that. You may have taxation on your 401ks or your qualified money at death. Right? All those things may come into play for this earner where this death benefit can come in handy. So, right, it can help us. What can it do? It may end up taking all their retirement income from taxable sources. It's just another way to mitigate taxes on qualified withdrawals is the bottom line here. It's just very tax efficient. It gives you a lot of flexibility in the future. And of course, we talked about this great way to accumulate money and supplement retirement income or whatever the policy chooses. There's no, it's just money in a policy. You can use it any way you like. Mitigate future tax liabilities, of course, additional savings component, and asset protection. And then our last and our favorite, we got high net worth people, of course. They often exceed income thresholds. We're looking for tax advantage ways to invest. They're more focused maybe on asset protection or preservation than growth. They also have higher life insurance needs. Josh mentioned this a while ago. These high net worth people may have well-diversified portfolios, but they face these unique tax and investment challenges. So they want to lower their tax burden. They want to focus on asset protection. They may want to be more aggressive with some of their investments. So this can be a good tool to help augment that aggressive strategy. They know they're not going to lose any money in this product. They got accumulation 100% tax deferred. They got access to the cash tax free. And of course, they want to maintain ownership of it. The policy cash values provide liquidity, of course, for anything they choose, right? Their own personal needs, fund college. We mentioned all these things for your children, their grandchildren, whatever their goals are, the product can step in there and solve those. So very tax advantage way of investing for key employees. They're also very focused on asset preservation typically, and typically they have higher life insurance needs. And then my favorite one, I say this for last because I love Maureen so much. The future is female, right? Women, what are the issues they face? They typically live longer than men. They're much more likely to have a savings shortfall in retirement, statistics say. They need to stretch their savings with options, providing these tax-deferred growth. And distributions make life insurance a very viable option. What do women do? They live longer than men, typically, right? They're concerned about not being a burden, right? They want to pay their own way. They're worried about a long-term care event, right? They may need to take care of a parent down the road. They may need the flexibility of the cash in the policy to pause their work, to take a break from work, right? To help out a family member, right? They're more likely to end up widowed in retirement. So what's on their mind? What do women worry about? They need a solution in a lot of different aspects. They need to think about, of course, about income in the future. IUL can be a very great way, like all the other folks, provide tax-free income, tax-deferred growth, accessible cash. They're really concerned about these chronic living benefits that can occur. Your chronic event, your terminal illness. They don't want to be a burden to the other one. They want to take care of themselves, right? These products here can offer a lot of different riders. These products can become a very efficient way of transferring the risk that happens to people in real life. They're buying it for the accumulation. They're buying it for the tax-free nature of the product. But it's funny how these little riders really can come into handy in a lot of different situations. A lot of flexibility. It puts another asset on their balance sheet. So the other great way to help women avoid being a financial burden to their family, to supplement retirement income and protect their family with a death benefit. Isn't it nice to know that you're doing multiple things with one simple product? So the future is female, of course. 100% tax-free death benefit. It creates a legacy. Hey, who does not want to create a legacy? A lot of people I talk with, they joke about it, but in the heart of hearts, most of us would like to leave a legacy to our family, right? And I told you before, it's very important you think about how you're going to effectuate your savings in the future. How are you going to get income in the future? You should be thinking about buying product and selling products that create income for your client. IUL can be a very strong recommendation in that aspect. All right, thank you. So again, as I talked about earlier, Life Insurance Awareness Month. Please, hopefully you can use some of these tools. Maya Nexus. I'll wrap up here. I'll give it back to Glenn and Maureen and Josh. Please get access to Maya Nexus. That's where you're going to find all the marketing pieces. Of course, if you need something, get with Josh. I'm also available to you if you want me to go over the product a little bit more, answer questions. I'm happy to do so. I'm really proud to be here. I think we play an incredible role in the economy and what we do for people. Please find your own value statement. We were talking about a minute ago. Find your mission statement. If you ever get down, you ever get bored, you ever get tired, you ever get burned out, remember why we're doing this. We can impact people's lives in a very positive way by what we do. And I appreciate all your time. Thank you very, very much.
Thank you, Steve. And that is why we're here. It's like you could have come on here and just talked about your products, but we're not here to do that. We're here more to talk about, okay, what does your client base look like? What does your prospect base look like? What do you know about them? What do you not know about them? And how do we work together to sort of unpack all the opportunities in front of you? And so I think we're very like-minded, Stephen, DMI and the Nexus, you and I as well in that regard. So in a moment, I want to share with the group some of the webinars that we have coming up that I think everybody here is going to find really interesting. It shows kind of our commitment to helping you guys on a day-to-day basis. But I just wanted to ask Josh what you thought about this presentation and the maybe the personas, whatever your thoughts might be.
Yeah, no, Steve did a great job, great information. But as well as Steve did, if you don't feel like an expert on this stuff yet, don't feel bad. You don't have to be an expert. I lean on Steve, lean on us as any cases come up. And again, don't feel like you have to be an expert. Now you can say, I have a solution that not every advisor has. I have a solution that will make it much easier to reach our growth objectives and to have a tax-free death benefit and tax-free income. And let's discuss what portion of your assets might be appropriate for this. It's that simple in terms of the concept, and you want to make it simple for the clients. But then besides the product, what Steve hit on is very important. While it's fresh in your mind, can you do that who do you know activity? Who do you know in your book of business that's a business owner? Who do you know in your book of business or who you're approaching that is a high income earner who's maxed out their retirement plan contribution limits or may have an income that's too high and might exclude them from certain plans? Who do you know? And the female one is great. I'm sitting here as he's saying that and realizing that my own wife is probably underinsured and needs more. So feel free to reach out to me to give me some quotes. But in all seriousness, that's a great hook. Who do I know in my book of business that is female and needs to have a conversation about making sure that their own needs have been adequately taken care of based on the longevity and all that's expected of them. So try that even today while it's fresh in your mind. Who do you know? And then come back to myself and I'll partner with Steve to make sure that we help you deliver these solutions and not for nothing, identify some other sources of revenue and income that you can generate from your business by utilizing these solutions. So great job, Steve. You can tell we definitely saw the 37 years of experience as of July 5th come through in that presentation. Well done. And that's all I got. That was great.
Thanks very much, Josh. I appreciate it. I just want to share something with everybody real quick. This is I don't know if everybody can see all of this, but we've got a pretty long list of upcoming webinars, and just be aware our next one on July 26th sort of falls in line with this topic. It's finding the right fit with LTC. So 70% of your clients are going to need LTC. It'd be good to know more about it. So that's what we're going to cover on that webinar of the 26th. If you have not become CSSCS certified with Social Security claiming strategies, and if you feel like you don't understand Social Security well enough, you don't understand the importance of bridge capital and helping your clients retire at a later time so they can get more out of their retirement plan, think about that webinar. If you want to do that, you want to get started as soon as possible, because that's one where you can get a certification. You need to study beforehand. You got to get your books and all that kind of stuff. And then in August, we're going to have a Lift Life Insurance as a Financial Tool webinar. 13th, Life Insurance Professional as an Estate Planner. That's going to be really interesting. You're going to be hearing a lot over the coming weeks about a virtual estate planning software packet, our software program that can really help to increase opportunity for your business. You don't have to necessarily lean on an estate planner to get more out of client opportunity. That and so much more coming up. All that stuff, like we discussed, is really geared around helping you guys through your day-to-day. I know a lot of you are very independent, and sometimes helps to have somebody to reach out to and just chat about anything. And Josh is a great guy to do that with. I'm also going to just very quickly share his contact information. So if you want to reach out to Josh and discuss any of the upcoming webinars, any kind of marketing tactic, any kind of recommendation around products, give him a call. Clearly, he's a nice guy, pretty funny, very smart. Some would say handsome. So anyway, guys, I appreciate the time. And Josh, Steve, Maureen, it's awesome having you. Thanks so much. All right, everybody. That concludes our webinar.
Thank you, everybody.
Thank you.